Officials from Uganda Bankers Association, led by the Executive Director, Wilbrod Awor, have appeared before the Finance Committee of Parliament to give their input in the amendments of the tax bills and rates. In the tax amendments bills, they are also introducing a withholding tax of 10% on the commission paid by bank agents. However, Executive Director, Uganda Bankers Association, Wilbrod Awor, argues that agent is an extension of the bank and there are already excise duty charges.
Have a specific role of intermediation. Yes. And that's why they are licensed, their conditions they are given. They collect deposits, they are not playing. You may be a payment service provider, but you are not playing the intermediation. That's why licenses are different and categorized. Indeed, they want those level grounds. Let them apply and get a banking license so the level is clear. Simple. The roles are fundamentally different.
Members of Parliament say that other players in the industry of mobile banking say that the level is not leveled.
Ammendment is basically for harmonization of electronic payment systems, so that you don't find this one is more expensive than the other.
That's why we the banking agents, there is an element of double taxation from one you're talking about, that they are already taxed. Then it makes sense. Yeah. Then you need to make a proposal that is balanced to say, okay.
Doing almost the same thing as MTN agents, Airtel agents. And when it comes to MTN and Airtel agents, when they are paid commission, they are being charged the 10% withholding tax. So this 10% is on the commission that is earned by the agent for the work that they are doing on behalf of the bank. It is to level because MTN, Airtel, they're being regulated by BOU as well.
Under the Value-Added Tax Amendment Bill 2024, they want to introduce charges on the proceeds from the supply of goods through auction by an auctioneer, and to the banks, it is the sale of collateral presented for a loan, which proceeds go to the bank and VAT paid by the bank. Bank officials explain that collateral is a fallback realization in case the customer fails to pay the loan, and this VAT will just make recovery harder.
Is it an issue? When banks are auctioning goods, these are assets most of the time that have been mortgaged, used as collateral for collecting, for debt. So if I fail to pay as an individual, the bank is selling an asset so that they can collect money that is due to them. When you look at the definition of financial services under the VAT Act, all that is part of dealing with loans and ideally should be seen as a supply of a financial service or pattern is to exclude those foreclosure assets as the banks normally refer to them. So those would be the assets that they sell through the process of recovering debt. So once you exclude that, then it means whatever else is not that, then should be captured.
Okay.
Members of Parliament had mixed reactions on this amendment.
Number 3, the owner of this property. If you are selling, include VAT, it becomes his what?
Amount of money that I took from you was 100. So if they charge on the 300 that you have gained as interest, is that a bad deal?
While officials from URA emphasized that no one will require banks to pay VAT on a foreclosure.
Services means granting, negotiating, and dealing with loans, credit guarantees, and any security for money.
Okay.
So if you're foreclosing, you're basically doing it for some security for money. So it's a financial service and it's exempt under second schedule. I don't think anyone will require you to account for VAT on a foreclosure.
So this amendment of the 5% tax on non-business assets attracted debate from financial stakeholders, asking URA to define it.
Have it, let us harmonize it across all assets, whether held by a company or a partnership or an individual, the taxation regime should be the same.
It means you are creating a third regime, which is non-business asset, which is neither rental nor business. In other words, you are changing the whole principle of income taxation to stamp duty.
The way this has currently been phrased, it's subject to abuse, and also we may have challenges in collecting the tax because people will most likely abuse it.
Being sold by an individual or a real estate, it would be taxed under business income. So when we look at the sale, it would go without tax. So the 5% I think is a fair one on the sale of the actual property. Because then
Members of Parliament say that the discussion with different stakeholders is to come out with clear tax bills. I'm Navka Farida and Gloria Gwitabinji.